Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we learned about Bollinger Bands and how traders use these in their trading. In today's lesson we're going to learn about the Average Directional Index, or ADX for short, an indicator which helps traders determine whether the market is trending or not, how strong that trend is, and whether the market may be switching from a trend to a range or vice versa. So let's get started.
Okay, so here's what the ADX indicator looks like when it's plotted on a chart, and as you can see it's made up of three lines. I'm not going to go into the exact formulas for each line. If you're interested in that, I've posted a link if you're watching this video on YouTube or one of the other video sites in the description section or just below the video if you're watching it on InformedTrades.com with a much more in-depth explanation of all the formulas behind the indicator. But what I feel it's important to know is that the ADX line is composed of the two other indicators which are known as the positive directional index, or plus DI line for short, and the negative directional index, which is the negative DI line for short. So here's the ADX line in black, the minus DI line in red, and the plus DI line in green. The plus DI line is representative of how strong or weak the uptrend in the market is, or another way of saying that would be how strong or weak the buyers in the market are. The minus DI line is representative of how strong or weak the downtrend in the market is, or another way of saying that obviously is how strong or weak the sellers in the market are. As the ADX line is comprised of both the plus DI line and the minus DI line, it doesn't indicate whether the trend is up or down, but simply the strength of the overall trend in the market. And one of the unique things, and one of the reasons why I really like this indicator, is it paints a really nice picture of both the buying pressure and the selling pressure as two different lines. And then gives you a one line which gives the overall strength of the underlying trend. When the ADX line is above 40 and rising, this is indicative of a strong trend, and when the ADX line is below 20 and falling, this is indicative of a ranging market. So you can see here it's below 20 and the market is ranging there, and there it's above 40 and the market is trending strongly. And some people will put that, just for your knowledge, some people will put that 40 number at 30 for the strong trend. Some people will say you can start looking to trade trends above 25. There's a lot of debate as to what's the best number to use there. But anyway, one of the first ways that traders will use the ADX in their trading is as a confirmation of whether or not a financial instrument is trending, and to avoid choppy periods in the market where many may find it harder to make money. In addition to a situation which we're looking at now, where the ADX line would be trending below 20, the developer of the indicator recommends not trading a trend-based strategy when the ADX line is below both the positive DI line and the negative DI line, even if the ADX line is above 20. So here you see a situation where you'd want to avoid trend strategies, or maybe avoid the market altogether, because the ADX line is below both the positive DI line and the negative DI line there, and you can see that there's not much action in the market at all at that point. Another way traders use this indicator is to identify the potential start of a new trend in the market. Very simply here, they'll look for a move of the ADX line from below the 20 line to above the 20 line as a signal that the market may be beginning a new trend. The longer the market has been in a range here, normally traders will, when they see that move above the 20 line, the longer the market's been in a range before that point, the greater significance they're going to place upon that as a signal. So you can see here, as a chart of Goldman Sachs, there's a couple months of just real dead range in the market, and then you have a break above 20, and then you have a good trend that results after that. Now obviously you're going to want to confirm with other things. There's no sure thing in the market, and hindsight's 20/20, but there's a good example of one situation where this did work well. Another way that traders use the ADX is as a signal of trend reversals. When the ADX is trading above both the plus DI line and the minus DI line and then turns lower, this is often a signal that the current trend in the market is reversing, and traders will position themselves accordingly. Okay, so you've got the trend here, you've got the ADX above 40. You see it turn down here, and the market does reverse as a result of that. If you look back a little bit from that, you'll see another break above 40 where the market did not turn, another break above 40, and then the ADX turned down, and the market did not break below that. But again, there, if you notice on the one we just looked at, you did have a break of the trend line there, so you had some additional confirmation that may have helped you not get faked out on that first one if you'd been following that strong trend line that we've looked at in the last couple of lessons there. The final example that we're going to look at is what's known as the DI line crossover. If you remember from earlier in the lesson, the plus DI line is representative of the strength of the buyers in the market. The minus DI line, which is red here, is representative of the strength of the sellers in the market. And very simply in this strategy, when the plus DI line crosses above the negative DI line, this is an indication that buyers are taking control in the market, and some traders will look to go long when that happens. And when the plus DI line crosses below the minus DI line, this is an indication that sellers are taking control in the market, and some traders will look to go short as a result of that. This is definitely one, like the other crossover strategies that we've looked at, that you're definitely going to want to have some other confirmations on. But here was a situation where it would have worked out well to buy there on the crossover and sell there, and there's a nice run up in between those 2 points. There's a lot of different ways to trade the ADX, and there's a lot of other good information out there. So I'm going to try and put a page together and put a link in the description section if you're watching this on YouTube or one of the other video sites, or just below the video if you're watching it on informedtrades.com, with some links to some other resources. The goal of informedtrades.com is to build a community of traders in a place where we can all get together to learn the markets without all the hype that's associated with most trading education. Every page on informedtrades.com has a comment section, so I encourage you not only to visit the site, but to communicate with other members of the community by asking questions, pointing out things you think others might find interesting, and sharing your experience so we can all learn together. That's our lesson for today. In tomorrow's lesson, we're going to learn about the parabolic SAR, which is an indicator that traders use to set stops when following trends in the market. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below, or visit us at informedtrades.com. And have a great day.